All right, all right. Welcome to episode 32 of Collision Coffee Talk. I'm running on steam and caffeine with very little sleep. It was another football weekend, but I've got some appointments coming up, so I'm going to pre-apologize. I try not to make appointments on Mondays, and then I get up and I open up and I go, "What all's been going on this week to talk about?" But I have an appointment today, so I'm gonna it's going to be a shorter episode. So if there's anything that I don't cover today that you guys thought I was going to cover and I miss, then you can absolutely get with me, and I will. I love to talk. I love to talk about other people. So, I mean, those two things go really well together. All right, episode 32. What are we going to talk about today? We're going to talk about shops that are being removed from DRP programs currently and what that means and what the projection of that's going to look like. New thing. So I'm being told by shops that they're being removed from OE certification programs. And so we'll talk about that a little bit. There was a report issued in Automotive News magazine that there needs to be more OE shops, and of course we're gonna talk about how I feel about that. asTech just continues to have problems. It's like it's like that wreck on the highway that every time you drive past, you just have to rubberneck a little bit. So we're gonna rubberneck and look a little bit at that is the wreck that is asTech right now. A progressive supervisor has royally pissed me off. I haven't been this mad in a very, very long time. I used to think nothing surprises me anymore, but I am angry and I'm going to share that with you a little bit and talk about some plans and some possible consequences for the anger. There are progress on some RTA bills, so we'll give some kudos and some flowers to some people. And then we're going to talk about the paint material inflation that continues. So there's a lot to cover, and I really do want to get to the why I'm angry at a progressive supervisor, but I'm going to save that because it's kind of like, it's like clickbait, right? If I like jump off and the first of the episode, I talk about what's making me mad, people may not watch the rest of it. Although I am doing that chapters thing now on the episode. So if you're watching it on YouTube, there are chapters now where you can fast forward. So I guess that's probably going to prevent people from having to watch all the way through like they used to. But no, I'm not going to tell you what's got me so angry right off the bat. We're going to make you hang around for that one a little bit longer. All right, so we started seeing some posts. Actually, it was not last week. It was the week before that, but I didn't have quite a chance to get to it last week. That shops are being contacted and being told that they're going to be removed from DRP programs. This is just one sample post. The technician was very excited, by the way, celebrating tonight. Allstate called today and said they are cutting shops. We've been on their program basically for longer than the 14 years that that particular technician had been there, and they're being removed from the program. This happened a lot during, I don't want to say a lot, there's been several phases of this where insurers seem to expand a DRP program, and then they'll cull a DRP program. And we saw this happen a little bit during COVID, and probably at the start, and then they regretted that as we got further deeper into COVID. And we saw this happen a little bit coming out of the recession in 2007, 8, and into 9. What that is, I think people get upset about it because it's like this shop that they've been with the program. They've been with Allstate for over 14 years. The shops that were contacting me the last time this happened were shops that had been on the State Farm program when I put them on it. I mean, that is how long they were on there. I mean, we're talking 20 something years at the time they had been on the program, and they were getting notices that they were being removed. These shops had high scores. They had great customer service scores. Their KPIs were good. And they're like, why are we getting removed? And they would call me. I guess originally, like, they thought I could do something. I'm like, I don't work there anymore. I can't do anything. I can't help you. But what is that? So as claim count, you guys have all seen these articles that are out there about claim count decreasing, whether that's a lower volume of claims being turned in. We had thought 2015 was going to be when claims started to decrease, and it didn't happen for a lot of reasons, but claim volume decreasing didn't happen the way we thought it was going to be. But over the last 2 years, claim volume and so what's being turned in is continually decreasing. And then we have a couple other problems on top of that. We have maybe maybe not a lot of customers returning and having those cars fixed. There's some allegations of that cashing out, which we saw recently in the bill in Arkansas, that was going to demand all losses be co-paid, that customers, even third parties, not be allowed to be direct paid for physical damages, because they wanted to ensure the vehicles were being repaired. This was based on lien holders, not on body shops, but it was a really good beneficial law for body shops if done correctly. But so maybe we have a decrease in volume. We have a decrease in repairables in a couple of different ways. One, customers electing not to repair and to cash out, and then an increase in total losses. And so, if you are a DRP, then you need repairables. And for most DRPs, you've fallen into that volume trap where you have to have a certain number because your average severity is so low. You need a certain amount of claims to go through the system every month to keep generating a cash flow that doesn't quite necessarily pay the bills. When I was in high school, one of my part-time jobs was working as a teller at a bank. And we would always talk about check kiting, and that was where people never really had money. They would just write checks from one account to another account and keep moving fake money around by making fake deposits, to hopefully, get to keep spending money you don't have. And they called it check kiting or whatever. And in a way, body shops kind of move things around, accounts receivable, billing out, kind of just like the cycle that there's never really that much money truly on hand. That's that net, right? The net is so low. We never really have a lot of money. We're spending it about as fast as we can make it, or we're spending it faster than we can make it, which is when we say shops work themselves broke. But if you rely on a volume model to be sustainable, so to speak, and now there are things threatening your volume, whether it is that claim count and repairables by total losses or customers not fixing cars, then insurers, based on national accounts that they have to make some very tough decisions. Typically, is that the national accounts have benefits to the insurer that, unless you've read one of those national accounts, you don't know what those are. You guys think that it's just the repairs that are the benefit, but there's a lot of benefits in those contracts. And so those national vendors, to perform that, are sometimes promised a certain amount of claim volume. So if a market can no longer support all of the shops having healthy claim volume in them, then people have to go. And that means if you're an independent repairer or an independent dealership, you're probably the one being asked to go, because there's a bigger benefit to a national vendor covering policyholders across 50 states than there is maybe Bob's Auto Body here in Little Rock, Arkansas. So we had lots of long-tenured, high-performing shops in the last round coming off of DRP programs. And we have some long-tenured shops right now being asked to come out of DRP programs. I don't think it's over. So just if we continue to look at what claim volume is doing, the insurers will continue to make adjustments to ensure their top partners, which ain't you. I don't care what they tell you. I don't care how many friends you think you have, or how long you've been on the program, or how invaluable you think you are. If you're not one of those nationals, then you're susceptible to being cut based on, they don't want to. I can tell whoever's in that market's like, God, we don't want to lose them. They're one of our best shops. Customers love them. But the decisions that are made high above those people where the bean counters are, they don't have control of that. So I think we're going to start seeing a little bit more of that this year. If you are an independent repairer, I made it very clear. I don't like DRP, and I don't like them because I managed them for so long. I was in control of DRP for so long, and I just watched that from that side of the fence. So I'm not a fan of it. They're not concerned with your profitability. They're not concerned with all those things. So I don't feel that it's sustainable, or safe for consumers in those ways as well. But regardless of that, if you are an independent repairer, or you're a small DRP, if you've got 100 shops or less, you're probably a little more vulnerable than just the mom and pops right now. But if you are not one of the nationals and you are on a DRP program, you need to be very mindful of which programs you are on, with which insurers, with what the contract says, when you can and cannot be removed. Obviously, it's kind of like an at-will thing for the insurer. But what are some of those things? And then you need to know how much percentage of your business that particular insurer represents. And then what would some alternatives be? Usually the shops reaching out to me are panicking because, particularly when State Farm was doing their last round of cuts, a lot of those shops were like, hey, Kristen, that's like 30% of my work. That's a huge chunk to think you're going to lose instantly. Like you may not, some of those customers may have came and saw you without the DRP, but if you think you're going to lose 30% of your business, that's definitely going to keep you up at night. It's definitely going to make you a little nauseous, have some problems. So now's a really good time if you are on a DRP to be thinking about which insurers you're working with, what percentage of your volume they are, and then what would a plan be if you lost one? Like start thinking about a game plan. Would you get a fleet account? What would you do? But now's a really good time for that. I think we're going to see more of this, which then brought up a very interesting thing that started happening last week. So I I have had shops reach out over the last week, that claim, if that they are going to be removed from an OE. This particular OE would be Tesla. They're going to be removed from an OE's certified repair network because the owned shops, so Tesla has collision centers that they own, that also do collision work, need more volume. So in other words, there's not enough volume within the owned stores that Tesla has. They need to increase the volume. And so if you're within, or say, or so 70 miles of an owned Tesla store, that you may be being dropped from an OE program. And then I had two different Tesla owned, the people that worked within two separate Tesla owned shops in different states reach out last week and say that their stores were getting on DRP programs. So the Tesla owned stores were going to be getting on, a particular Good Neighbors DRP program. And they were going to become DRP shops also to seek to increase the volume as well. So that volume game, it just is what it is. And he who has the most gold makes the rules, so to speak. And if it's an insurer's DRP program, they make the rules. If it's an OE certification program, they make the rules as well. So it's very interesting to see OEs looking at volume. Now, I know that's a different kind of a circus and monkey with Tesla in that they own stores, but it would not surprise me to not see other certification type decisions being made. So it's like, well, we'll talk about the other part of that somewhat um, tickled me, made me laugh a little bit, because here we are listening to body shops, I don't want to say complaining, but scared that they're getting turned off of a DRP program. And at the same time, shops calling that they're scared that they're going to be turned off of an OE certified program. And these shops invested hundreds of thousands of dollars. I mean, these original Tesla shops spent a lot of money. If you look at what's required and the training and everything that they have to go to, that's a significant investment. It was bad enough that labor rate was being eroded out of that program. It went from like $120 an hour for the average, repair hour on those, which is similar to what you would see on the certified Porsche, Audi, Mercedes, those repairs. And Tesla had somewhat internally and intentionally, in my mind, driven that all the way down to around $60-$70 an hour across the country. Okay, so that was bad enough. But now you have owned stores jumping on an insurer's DRP program, and then obviously getting rid of their competition. I was surprised, honestly, it's taken this long. I'm going to own a store. I'm the OE. I'm going to own my own body shop, but then I'm going to let other people right around me compete with me. That didn't seem like it made a whole lot of sense. So at that time, so here's what's really interesting to me. I was chuckling because as all of that was happening, I get a call to go look at this article that's in Automotive News. So that's like a dealership focused magazine that's ran out of Detroit. John Huder, who used to run Repair Driven News, is at that magazine. It's a great magazine. And they produce this article, basically, report calls for more manufacturer certified collision shops. And I just kind of laugh because when you read it, you realize that this is just a PR spin, right? There's a company that has an incentive in this that puts out a story that says, "Oh, we need more OE certified collision." And so I'm reading through it and just laughing because I'm like, well, I can think of a whole lot of shops right now that probably disagree with being OE certified. I can think of a lot of I guess the domestics and the cars that don't have parts restrictions, questioning whether they wanted to be OE certified or not. But the crazy thing about this article, and I always tell people, is to be very careful about when you read an article. Um, it's very easy in the world of human manipulation to get the answers you want based on the questions you give. So if I want a particular set of numbers, then I write questions in a particular way that I know I'm going to get those answers. It doesn't matter if you gave me 100 people from one state or 1,000 people across 50 states or whatever. I know just by the way I write the questions what answers I'm going to get already. So those things about that we used to do in the insurance industry would be like, is OE certified collision important to you? Uh, yeah. Like who's gonna say no? I remember a question we used to run was, do you believe you get more detailed news from a newspaper? Yeah, yeah. Do you read the newspaper? Yes, I do. I read the newspaper. Because nobody wanted to say that they didn't read a newspaper or they weren't getting their news from a valued journalism source. And so then when you would actually like drill down, none of those people had read a newspaper in the last 15 years, so to speak. Same thing with this. We would go, do you believe certified collision repair shops are important? And consumers go, yes, I do, because it's a leading question. If you just ask people, what do you feel is important in collision repair? That's not an answer you're going to get. So when you see these articles or you see this stuff that comes out, it's very important that you look at, well, who did the study? Who paid for the study? And then what questions were there? And then you have to kind of think like a consumer. So I, I've made it really public. I guess I'm the only one in the industry that kind of thinks that way. I just don't think there's any value whatsoever to OE certified collision repair programs unless it comes with parts restrictions. So, in other words, if there's something that prevents other people in a market from doing the same thing you do, right? Like I can fix Hondas, I can fix Chevys, I can fix Toyotas, I can buy any part on those cars. So you can be certified and pay all the money and go to all the classes, and I can do the same thing you can do. And I don't believe there's a Toyota customer out there that really cares, so to speak. But I can't do that with Audi, right? And I can't do that with Mercedes-Benz. I can't do that with Porsche. And that's or some of the EV manufacturers, Rivian, or Lucid or whatever. But so those may have some value if they honor it. We do have some cases right now where some of those parts restricted OEs are going back on their word, where they said that they wouldn't have another competitor within a certain mile of you. And we have shops where they're allowing a competitor like 3 blocks over. And so here's shops that invested a ton of money, a ton of time. They did things the right way. They built a reputation in a market, and then 3 blocks over is now a DRP shop that is DRP focused, but is now carrying the same certification as they do. So that's the problem with PR spinning. We'll see how this goes for the rest of the year. Just know that everybody, so I was reading a story. Okay, I'm just going to share. Okay. I was reading a story about a week ago from one of my least favorite scan companies. And part of the story was they wanted to brag that use of their one of their products was up 50%. And I just kind of chuckled because I was like, that's really terrible PR. That would be like, I mean, I don't know, like Opus, right? Saying use of our Opus map is up by 50%. Well, no shit, State Farm mandated it. And, no shit, Geico mandated it. I mean, like put the lipstick on the pig, but it's still a pig, right? Like, just be very careful whenever you're reading any news And anyone, whether it's a software company like an estimating company or anyone shares a stat with you and just go, what's the true origin of that stat and what questions have they asked? And if you really want to dive in deep, we'll send them an email and go, can you tell me what sample that comes from? How many people did you interview to get that sample? Where did you interview them from? And what questions did you ask? Right. All right. So we'll just go back into my least favorite. Okay, I don't want to say that this one entertained me because I started getting a lot of emails last week. My email box just started going dinging on my LinkedIn, and I was like, wow, what's going on? Uh, and it was people telling me that they had been notified that they had been laid off. There had been another round of layoffs. There was a round of people taking pay cuts, then there was a round of layoffs, and then there was a kind of some explosive layoffs in Mexico, and then now we've had this latest round of layoffs. And this is the email that went out to all the employees. I had about 20 different people send me this in 20 different formats. I thought this was interesting that somebody, printed it off, tore off the top, and then just sent me as an anonymous to the in tray. It's from Craig Edmonds, the president. Okay, I guess, I'm going to give some leeway that these emails are hard to send. There are times when companies need to do layoffs. I just don't like this paragraph. So you basically in the first couple of paragraphs tell everybody why, they're getting laid off. I have a difficult announcement to share due to macroeconomic conditions that include continued reduced claims frequency of automobile accidents, rising costs in the industry, and the need to streamline our operations. We made the tough decision to reduce our workforce. Okay, yeah. It was a hard decision to make. Okay, great. It's that third paragraph where the ship sort of leaves the dock a little bit and it says, I just want to assure you that our company remains financially stable and continues to grow our market share. Wait, I'm sorry. The first paragraph says that there's these conditions, reduced frequency, rising cost, but then you come down here and tell us, no, we're still making money and growing. We're doing fine. We're just going to grow without you. We don't need you anymore. Which that's just like, somebody probably should have thought that paragraph through a little bit more. I'm pretty sure that paragraph's probably in there for investors more than it was employees. But then I thought this one was interesting, right? Where it says, there will be no impact on our service levels or product availability. One of the people that wrote in said that there are now less than 17 technicians in the entire United States. And I'm thinking, wow, like some of these scan tools, I believe, like for some of the OEs, I believe the tools have to be in the United States. I don't believe they're allowed to be out of country. Could be completely wrong about that at all. But I'm thinking, if that's true, if these tools do have to be in the United States, and I've got accordingly, as reported to me, less than 17 technicians in the United States, but there's going to be no impact on service or whatever. That was interesting, but I'm going to make that. It will be a new sticker, kind of redesign it. I think I'm going to put coffee talk on the dumpster and just kind of like, I'm fine. This is fine. Everything is fine. We're just going to have the dumpster fire. But it does not appear as though everything is fine, over there, but hey, it's how you spin it, right? Okay. What some of you have been waiting around. How did Progressive piss me off? Okay. One of my shops got this email from a Progressive supervisor, and at this time, I am not quite ready to share everything about this particular person. I got some plans, but I did want to share this. So here's what happens. Car's in, car totals, shop has fees. The adjuster agrees, pays the fees, the car's picked up. Now, after the car's picked up, our supervisor here wants to come back in on the tail end and ask a lot of questions about why this was this and why you charged for that and that and that. And quite frankly, none of your damn business. The thing's closed. It's been paid for. We're done. It's all over. Let it go. He can't let it go. So what he does here is this particular estimator at this shop is a female who's been in the industry longer than me, right? So one of those people that's got a lot of experience and a lot to share. But our supervisor here just, I guess, assumes that every woman that works in the collision repair business is a secretary or an estimator. So his response, basically, the estimator is like, if you want me to go through all this in detail and have a meeting with you, then it's going to have a fee. And I'm happy to discuss that. And then they gave him a flat fee. Well, our supervisor here didn't like that flat fee and writes back that says, if you would like authorization of a fee to respond to my request, I will make a reasonable assumption. You know what they say about using reasonable, that it will take you no more than 30 minutes to answer my questions. I will also assume, you know what they say about assume, right? You make an ass out of you and me, of an hourly wage of $20 an hour for a secretary in the US based on ZipRecruiter. But to be fair, I'll just go ahead and make it $30. So at 0.5 of an hour, that would be $15, and I can authorize $15 for my request. That has to be, okay, well, it's just one. That's one of the dumbest emails I've ever read in my life. So I don't know how this guy got to be a supervisor, but I would hope that the entire company and all of Ohio right now is reconsidering who they have in charge of claims and also their ability to send emails without somebody's approval. What I do know about this company is their president is an incredible, wonderful, experienced claims adjuster who happens to be a woman. And I know that this would probably make her angrier than it would be me. Haven't spent a lot of time with her on my career. Had a couple of different events she was at and I was at. We were able to exchange some words, got to hear her speak on several occasions. I think good things about her, right? Like knows what she's talking about, really has real field skill experience underneath her. That would I would almost 100, I'd bet $1 million. She's probably more mad about that than I am right now. But just the assumption that because this is a female in the collision repair industry in a shop, she's a secretary, not a seasoned, trained, experienced physical damage appraiser, customer service person that has to deal in and out with this for over 30, 40 years. That whole thing, I think also is a little bit of an underlying of kind of a lot of assumptions that a lot of us make in this industry when we're dealing with different people, whether that's race, whether it's men or women, whether it's origin, country, where you're from, whatever, but language barriers, etc. I can't believe it's 2025 and somebody was literally, quite frankly, dumb enough to put that in writing. The shop wants to do something about it. I'm going to let them kind of do their own thing about this. But I'm calling this out. So Progressive, I know your people watch it. If you want to have your HR department call me, I am happy to discuss this with them on a deeper level. But yeah, that's just infuriating that there's someone in power. Do women report to this guy? Like, does he have female women on his staff that are adjusters or appraisers under him? Do they have to put up with his garbage? Is this what he thinks about women in the industry? It feels like it's very 1950, like it's 2025 and we got shot back to the 50s. But to be that disrespectful to a professional, just kind of shows me how you see that side of the fence, how you treat them, what you think about them, how you think they're not worthy, how you think they're beneath you. And I think we've allowed that to fester a little too long on the insurance side. We don't have claims training the way it used to be, where you were in a claims office and you had people that had 30, 40 years experience around you, so that when I got into claims and, in the 90s, I did a lot of stupid stuff and I would say things, and there was always either a mentor, somebody that had a lot of experience, or a claim supervisor that had no problem like snatching me up by the ear, and explaining, how the cow ate the cabbage, so to speak. Like, you don't talk like that. You don't believe that. You will never say that again. You'll never. I think we've lost that. And so we've allowed this, a lot of these myths, and stereotypes to just kind of fester. And it makes the tension, and it makes a lot of the things that we're trying to do worse. So, yeah, that's how Progressive. So the headline will be how Progressive really ticked off Kristen. and that's it. Like, I don't mind if you disagree with the bill. I don't mind. I mean, like in this, it's a closed file. No, I'm not going to spend hours on the phone with you talking about something that's closed. It was authorized, it got paid. You don't like it, that's what court's for, right? But I'm not going to spend an hour talking to you about something that's no longer on my shop making me money. Um, we can disagree. That's awesome. But there doesn't have to be that. That's unacceptable. And I think that has to do with a lot of why there's a high turnout of women in the industry. Like women that go to trade school don't, there's not a, we're not keeping a lot of them. And that's just that's what they face. Like that's just in general. Like, I mean, I'm 50 something years old. I've been doing this my entire life, right? Um, and I still online have people go, what do you know about a car? What do you know about this? What do you know? Just the assumption. They never question Larry on what does he really know about a car or whatever. And I've never seen a lot of times when any other guys in the forums make any comments, there's an assumption that those people must be technicians, but any women that make comments in the groups, then there's assumptions that they're secretaries or estimators or whatever. So that really, I just couldn't believe that somebody put that in writing. So yeah, okay. Well, anyway, back to the next thing. RTA bill. So Washington and Texas, Washington's bill is through and onto the governor's desk. Texas is making progress on their right to appraisal bill. Moving along very well, meeting little kind of objection as it's going through. I had a shop write me and go, hey, why do you think the insurers aren't protesting these RTA bills? And is it because they have some plan to do something crazy after they pass? No, they don't. Like, yeah, if you look at Texas, they did a great job on a survey. They had the Department of Insurance send a thing out. You only had of the insurer after all of this publicity, and everybody's been talking about RTA for several years now. It's only like 1% of claims in the entire state of Texas of the insurers that have it are even using it. So for most insurers, it's like the fight would be a little dumb. There's some language that they'll be like, no, change the language or whatever. There's some penalty language I like where if the customer wins over a certain percentage, that the insurer has to pay their fees or whatever. I like that, but no, it's not insurers with some evil plan that after these bills pass, they're going to do something different. So it's just they're still not used a lot, and that's mostly because of the DRP. People that go to DRPs don't think about RTAs, right? And probably new language in the DRP contracts will say you can't talk about. It's like Fight Club, you can't talk about it, right? But if the goal is 65% or so of claims going through, and you got to think about that, 65% or so of claims is going through the DRP program, and you're at a 40 something percent total loss ratio. If I have that much called DRP penetration, then it doesn't matter. The RTA won't be that big of a financial detriment to an insurer. So there's not a reason to fight it. I think there's just some language that you'll find. There'll be a little bit of, hey, why do we even need this kind of thing? But once it kind of gets going, the insurers are not going to like do too much to get in the way of this. And for most of them, I'd much rather have RTA than I would public adjusters. So I know there are some cases of really good public adjusters and they do really good services, but I can tell you my claim career being around public adjusters was never really a positive experience or whatever. Okay, what's next? Well, if you've paid a material invoice in the last 30 days, you know that material has gone crazy. So Repair Driven News did this little article. Basically, it just says that for Q1, overall, paint material is up an average of 7%. So in one quarter, we've seen a 7% increase. You have not seen a 7% increase in the labor rate for the P&M on your estimate. Some of these you can see by the what they've got in here between 6.1 and 9.4% for the increase. It's going to continue with tariffs. I have no idea what's going to happen. Not a whole lot of the paint material is made here in the United States. So the tariffs will be interesting. I haven't asked the paint companies because that's the last thing in the world they want to talk with anybody, much less me, about is tariffs. So I think we're all just kind of standing and watching that one. But bottom line, here's the thing. I've said it over and over, nobody makes it through 2025 without doing material invoicing. Even if you're a DRP, or even if you're a national MSO, your discount you can't discount your way to profitability. And as those things continue to have inflation and rising costs, you've got to do something. Well, I don't care what you do, right? Write it on a crown, count it on your toes. I don't care, but you're going to have to do something that has a material invoicing. We use Eagle MMS. We talk about that all over the country. The main thing I like about that program is I don't need anyone for the estimator to get it right. The estimator can create that on during day one of the first estimate, and they can get an estimate of what those material expenses are going to be, and they don't have to be perfect. Like I don't. Everybody's like, well, what do we do when we're done and we have the final pour scale numbers? I don't give a crap what you do when you have the final pour scale numbers. If you want to make a supplement, do it. What I don't want to see you do is wait until the car's repaired, then you come back and try to add $3,000-$4,000 worth of material to your estimate. That's going to cause some whiplash friction with the insurers. I mean, if you don't care and you're an RTA and a go to court person, that's awesome. Like I love that, right? I've got a stack of, got some new stuff that got sent in that I'm gonna work on for court cases, but I love it, right? The retainers are big. Those cases go on for several years. I mean, like I don't technically don't even have to work. I could just work on the court cases, right? But for most of us, that's not a reality. We're not going to live that way. So we need to make that first invoice available in the first estimate. And that's what I like about Eagle. I mean, it's picture pages driven, you just kind of click. And then so estimators can do it. I don't have to wait for something to be checked out of a cabinet and attached to an RO. I don't have to wait for measurements to come off the scale. I don't have to wait for any of that. But I don't care what you use. Like I said, a crown, a tablet, you can use a cabinet system. There are other material invoicing systems out there, RMC, etc. Just use something. Like there's no way forward. There is no light at the end of this tunnel without an invoicing system, without you having to supplement the estimates you're writing. So if nothing else, make your goal this week to stop watching this video. Wait, go ahead and watch the end of the video. But then when the video's over, call your jobber and have a conversation with them about what they think you should do. I mean, obviously they know what your consumption rates, your products you're using, how your shop works, but call your jobber and have a conversation with them and say, what are some of the programs out there and what do you think I should be using? Whatever decision you make, don't think about the sales pitch. The sales pitch sounds really freaking cool. Think about how it's going to get used in your shop on a daily basis, right? Think about your people, your employees, their capabilities, and then make sure that whatever choice you come up with, that it fits them. If you call your jobber and they tell you there's only one solution, then call somebody else. Because I will tell you there are 4 or 5 solutions. I've got shops using all kinds of different ones and having success with them equally. So there's a lot of options for you out there. We just got to find the one that best fits you and your needs. All right, let's wrap this up because I got an appointment and I got some stuff to do. All right, what's on the shelf? I thought this was going to be stupid, and now I get little emails all day long that say, "Hey, Kristen, what's on the shelf?" Okay, this is my Voodoo Doll. I have several of these. I have several that are like very specific for very specific things. I get them as gifts based on things. I was fortunate enough to work in and then manage the state of Louisiana in claims for 10 years. And I love Louisiana and I love everything about Louisiana, mostly the food, which as I got older, I found I couldn't eat as much and stay skinny, which was a problem because I love to eat and Louisiana is a perfect place for when you love to eat. So the Voodoo, working some claims, not I got to work lots of hurricanes, but I got to work lots of other floods. New Orleans floods fairly easily, like it rains really hard. I think it flooded last week again. So I was in New Orleans working a lot, and I was in the quarter working a lot, and I spent a lot of time with some of the voodoo people in New Orleans and I like to learn things and I would hang around and listen to them talk. So I have lots of voodoo dolls. This one's my voodoo money doll. So this is the goddess of wealth or whatever, but I do have a couple of crazy ones. So somebody had saw it on the thing and said, "What is that?" I was like, "Well, it's a funny story." I have some other ones, but I won't show those because I think those would probably get me sued if I showed those. So we won't show them. I do get funny gifts. So it's kind of interesting when things make me mad. I get a little package in the mail and it's like, oh, that's funny. Awesome. So, all right. Well, that's it for this week. Like I said, do me a favor. Please promise me that if you are a shop and you are planning on staying open past the 2025, that you're going to immediately make some phone calls and start figuring out how you're going to invoice. If you want to talk to me about what I use for invoicing, obviously drop Melanie a little email. I'll get with Yanni. We'll get you together. We have a code that'll get you like $200 off Eagle. It's called I Hate Larry. So feel free to use it a lot, right? That would be awesome. But it's a given. I think by Q2, we're going to see more increases that may even double what we saw in Q1. So it's going to be very interesting. And I will keep you guys posted on how this goes with Progressive. I'm going to let the shop handle it their way for a while, and I just can't stand it. I may still jump in on that one because I'm angry. Or I may let the shop just transfer the whole file to me, and we may grant that supervisor's wish. He may get his 30-minute meeting to talk about fees, but it may not be with that estimator. It may be with me. Maybe that would be more fun. I don't know. I think that might cause the shop more problems than it would help them, but we will see. All right, you guys have a great week, and I will see you. Oh, there will be no coffee talk next Monday. I'm going to be out until late Sunday, and I know there's just no way that I'm going to be able to get up and get one out in time on Monday. So I'm going to give myself a break. So no coffee talk next week, and we'll pick it up the week after. My luck, some incredible news is going to happen this week, and I'm going to have to do one. So I'll see you guys later. Have a great week. Bye.